My friends, welcome back. It's Nick. I'm doing a different style of video today where I just talk here into the microphone and I don't have a camera turned on just because I didn't feel like it today. I felt like just getting right into the charts with you guys and showing you and then hopping off. That way this video will be a little bit shorter and maybe even more concise and effective. So if you like videos like this and this idea, what I want you to do is hit the like button because that is going to let me know if it gets kind of a good reception. And then if it does, I'll just keep making videos like this and it'd be even easier for me. So that being said, let's jump right into it. What I'm going to be doing here in this video is show you exactly how I mark up charts from scratch. And I'm also going to start with just showing you a trade that I'm in right now. So I'm in AUDJPY right now. I've chosen to enter a sell here at this resistance zone. I made a nice little profit on this last week. And what I have also done is I closed it in profit last week. You could see last week the total profit came out to be a little over $20,000 when I closed both of these on Friday, USD/CHF and AUDJPY. So I closed these. It was a nice growth for the account. The past 6-7 weeks, we've grown the account from $250,000 to just over $500,000 right now, $511,000, and we've got a trade currently sitting in profit. This is now in more profit. It's about $3,000 in profit, so maybe $515,000. So I got short on this right here, and the reason that I entered a sell on AUDJPY was because price was here at this weekly resistance zone. Price came into a weekly resistance zone where we've had a big bounce before, and I entered a sell. I put a stop loss above the zone and a target below, and I risked $25,000 on this trade because that's what I was comfortable risking. I'll risk anywhere between $25,000 up to $100,000 on a trade, depending on the quality of the trading opportunity. So we're still sitting in this. We're going to see how it sets up. There's a couple other opportunities I'm looking for this week. So now what I'm going to do is I'm just going to start with a random chart. Let's start from the bottom here. So GBP/JPY. What I'll do is I'm going to take everything off of the chart and I'm going to show you from scratch how I start. Okay. So this is where current market price is right now. What I start is I go to the weekly chart and I do these on all of these Forex pairs you see here. Most of the FX majors and minors, I exclude some of them like CAD/CHF and a couple others, but all of them are right here on the right side of the screen. Then what I do is I look at where current market price is. Right here, current market price is just floating around at this price, 204.1. All I do is I look at one area above price and one area below price where price could bounce. Now, generally speaking, right, price tends to bounce around areas where it's bounced in the past. So these kind of regions right here where it's bounced as resistance, broke above, came back, bounced as support, then took off. So what we can do here is we can just draw one zone above price and one zone below price. You're not always going to have a zone above price and you're not always going to have a zone below price. However, if the zones are there, then you draw them. In this case, right, these two little highs over here might not even be included because we can work with these ones that are more recent on the chart. So I just draw one zone above price and one below price, provided that there is in fact an area that's clear where price bounced at. Then after I get the zones constructed, I make sure it encapsulates all the price data. So I'm not going to be drawing a zone like this, right, because then you have a big region like where do you enter? But I'm also not going to be drawing zones like this where they're really, really skinny, because if you draw a zone like this, then you might have price push past it and you'd be putting your stop above here and you might get stopped out. I also don't draw zones like this where they're super skinny right at the extreme areas because you might have price push somewhere like that and not go all the way up there to the zone and then fall down and now you've missed a good trade that was perfectly fine to take. So I just encapsulate enough price data. I don't make it too skinny like a line, but I don't make it too big where the zone's like, 500 pips wide, something like that, right? Nothing like that. So once I have a zone above price and below price, all I do is I look at the middle of the zone and then I set a trading view alert there in the middle of the zone. The middle of the zone is the best spot to enter because it's a good balance between having an optimal entry and it's also a good balance between that optimal entry and not missing trades by waiting for extremes. For example, what I mean by that is if you're looking to take a buy down here, but you buy the moment price gets into the support zone, let's look at what it does to the risk reward. It's very, very simple. If you're buying there, the stop loss just has to go somewhere underneath the zone, right? So I'm just going to put it down here. And the target has to just go at a 1-to-1 risk reward ratio. If you're buying here towards the top of the zone, you could have the possibility of price coming down further into the zone just to bounce there at the most extreme low, right? That you've had whenever price pulled back into the zone. And then it could still move past that and then go hit your stop loss, right? So entering right the moment price gets into a zone is usually not the best idea. However, if you wait for price to go all the way down into the zone before entering, then you're going to just miss a lot of trades because it's not going to be the case that price always goes that deep into the zone, right? Sometimes it might stop a little bit sooner. What I've found in my decade of experience, having made millions of dollars in the Forex, crypto, and stock markets combined, is that just entering about halfway into the zone works perfectly fine. It's a perfect balance between risk and having good risk structure and taking plenty of trades. Plus, you get a better entry. So since you get a better entry, your stop loss distance is closer in terms of pips, right? Because it doesn't have to be way down here. It has to be at the same location. If you entered up here, the stop loss distance is like 370 pips. If you just enter right here, the stop loss distance is 283 pips, right? So maybe about like 20% smaller, 25% smaller. And this is with the same risk reward of at least 1-to-1 risk reward ratio. Because after I structure my entry halfway into the zone and the stop loss below the zone, in the case of buys, I just put my target at a 1-to-1. Very, very simple. So I will set this alert right here in the middle of this zone. And then what I'll do is I'll structure the one for the resistance. So if price comes up here to this resistance zone, what would the trade look like? An entry would be about halfway into the zone. Stop loss would be just above the zone. You don't want it to be this close where it's like just above the high, because then you'll get pinned out a lot on price just doing something like this where it spikes above real quick and comes back. But you also don't want it to be like this far either, right? So you just want to put it at an area where it gives price a little bit of room to move around, but not so much or not too little, and you get better at doing this with experience. And by the way, I teach all this in my free training. It's just a link in the description. That's all I'll say about it. I teach this all in a free training course. You can click that link in the description. It's completely free, and I teach this in full detail. I think it's like an hour-long video about exactly how I trade. Completely free. I give away everything. There's no sort of hooks or anything. It's all there. I just wanted everything to be in one location for exactly how I trade. So I made that video and I compiled every single thing, all the specifics about this in that video. So if price gets up into here, then I would sell right there about halfway in the zone, stop above and a target below. And when you go and you look at all the trades I take, you'll notice that every single trade is like this. This 80 JPY trade that I already discussed with you right here, the USD CHF trade that I took, I risked $25,000 on this last week. Look at what I did. There's a support zone, and we're here on the weekly chart, right? So I use the weekly and daily, and I entered about halfway into the zone with a stop loss below and a target above, and then price ended up starting to bounce, right? And this one actually went halfway to the profit target before I closed on Friday, just because in some cases I like to be flat before the market closes. So just USD CHF alone made me like $13,000. And if we keep going further back, you'll see this is 80 JPY, right? Halfway into the zone. If we go even further back, this was 80 JPY again. I kept milking it. And then we'll go here and we'll keep on going back. You can see 2 weeks ago, I had a week where I made $131,000 of profit. This is after swaps and fees and commissions. And what this was is, so like last week I made $20,000 trading, and the week before that I made $131,000, and the week before that, I don't know, I don't even know can't even remember how much I made. But when you go back and look through these trades, you'll notice all of them are the exact same. Look at USD CHF. You know, we took buys down here at the support zone, but this was a couple days before that. And you can see I sold here at a resistance zone, right? So I sold at resistance with a stop above and a target below. My entry is about halfway into the zone. And I only use zones that are really, really obvious, like very, very painfully obvious where price bounced at. If we go here to USD CHF, you can see that on this right here, that was my trade I took right there. Right, I entered a sell right here when price got midway through the zone. It bounced and went into profit, and I closed in profit. But I only use the zones where it's like super clear, right? Price has a clear bounce here, breaks below, has a deep push up into this region, and then it pulled down and it bounced to here in these areas. So like I sold right there and it bounced and I made a profit. And then I also bought right here last week. You guys saw that trade where I bought, and then that is, I mean, if I would have stayed in that, right, it'd still be going up right now. It's actually just recently made a new high the past few hours. So it's very, very simple. I buy at support, I sell at resistance. There's not a lot of pyrotechnics. There's not a lot of mental gymnastics. It's not complex at all. The rules are just draw a super clear support or resistance zone on the weekly time frame and buy or sell at them with a stop loss just past the zone and a 1-to-1 risk reward ratio. And I just do this over and over and over. So we're going to cover one more example right now. Let's go to one that doesn't have any zones on it, something that's like a fresh, clean chart. Here we go, GBP USD. So GBP USD, where current market price is right now, I'm going to try to find an area above and below price where I could sell at and buy at. So above price, it looks like we've got two highs right there. So alert could go midway through the zone, right? It's like halfway into the zone right there. So I would just click this little alert thing on TradingView. I would get it right there, and this kind of encapsulates that little high that spiked into there, and also this extreme high here. That way we can put our stop past that region so we don't get stopped out in case it just goes up there to test it. So this is a pretty decent area. Now let's try to find something below price. this is kind of tricky here because it looks like we just had price try to bounce right here, but then it broke it and now it's pushing up and it looks like it's retesting and might go down. However, it's not super clear. Maybe it is and I'm just not seeing it, but like for me, this doesn't seem super clear. So if I was just going to be real safe, I would just wait for something like this, like one of these lows to be hit. An alert halfway into the zone, which would be something like that. The problem is a lot of people won't wait for stuff like this because look how far it is, right? It's a long time. The last time it did this, it went from the September of 2024 all the way to December of 2025. So, or January of 2025. So about 6-7 months for that to happen, or maybe like five months. So a lot of people don't want to wait for stuff like that, and I get it. But keep in mind, you have like 24 Forex majors and minors that you can trade with, so you don't really have to worry about like frequency of trade setups, because normally me right now I'm averaging anywhere from 2 to 4 trades per week, and I'm risking an average of about $50,000 per trade, and I'm coming out in profit per month only a couple units of reward, anywhere from 1 unit of reward to 3 units of reward, right? So like $50,000, $100,000, $150,000 profit because of my high risk per trade. So if you were going to use this zone right here to trade off of, what you could do is you set your alert midway into the zone, which would be something like this. And then when price comes into there, you simply enter a sell there at the zone. So it would be right here along these highs, right? So like somewhere midway into the zone. So somewhere in this region, right? Let's say you happen to get an entry, I don't know, like it goes midway through the zone, starts going away a little bit. And let's say after it pushes into the zone, starts falling away, you just end up getting filled down here. So you enter there, stop loss above the zone, and target at a 1-to-1 risk reward ratio. And if you're doing this and risking a high enough dollar amount per trade, you're able to get out a lot of the losses at break even or smaller loss, because as they start trickling to the stop loss, you can always just close them early. And then as they start trickling to the stop loss, right, you can get out like, say like right here, if it looks like it's just going to like break above the zone because it's not going into profit, you just close that and you get out, walk away. It's no big deal. But if it starts going into profit, then you can just hold it all the way to the profit target. So this ensures that your winners are bigger than your losses. And the 1-to-1 risk reward ratio thing is just kind of like an emergency, right? The stop loss is there in the case of an emergency, like that's your max risk. But a lot of these, you can get out the loss a little bit smaller and you can hold the profit target a little bit longer to the 1-to-1. And that results in a bigger profit on average than a loss, even if you only have a 50% win rate. So that is the way that I trade. I hope this was useful. If it was, again, remember to hit the like button. I just want to see the metrics on this video because I'm just now starting to upload to my main channel again here on YouTube. And I want to know what you guys think. So if you put a comment, I'll reply to all the comments within like the first 24 hours. If I believe it's a comment I can help with or like a question I can help with. So if you have any questions about this, just put it in the comments below and I'll do my best to help. So thanks for watching. I'll see you in the next video, and make sure you hit the link in the description for the free trading if you want to learn all this comprehensively. I teach it all in there. That's at that link in the description. Cheers, my friends.